The real estate market in Metro Atlanta has been quietly shifting for a couple of months now, yet on the surface, it appears stable. As a matter of fact, we've had the same median price for the better part of the last year. Now, as we peel back the layers of the market and dive into the data, it's clear that there are cracks, and these cracks, they're not small and they're getting bigger. In this video, we're going to go over exactly what you need to know about in this market so that whether you're buying or selling, you can position yourself for success and protect yourself. That and more coming up in this month's edition of the Atlanta Housing Market Update. Let's jump right into it. So take a look at this data, right? You look at this chart here, it's like, man, this is a stable market. It's been the same median price for over a year and a half, right? That's why this is so misleading. And that's why these signals are a little bit confusing to read. That's why I like diving into the data. So let's look at what's happening here, because with this very first chart, this tells a very compelling story. Now in this video, we're going to focus on the overall Metro Atlanta housing market. It's going to be very county specific. I've got other videos that come out over the course of the month. If you want to look at the luxury market, $1 million plus, got that dedicated video. I've got the North Atlanta video as well that focus on the northern cities and suburbs outside of the perimeter. And in addition, this month, we're also going to have an ITP video that's going to focus specifically on inside the perimeter. So Atlanta, Decatur, some of those other areas as well. All of that will be in the ITP video. This is the overall housing market video. And for greater Atlanta, this is alarming right now. Now, what I want to call your attention to specifically on this chart is the relationship between pendings and showings. Because if there are no showings, you can't have properties go under contract and close. You need people to come and see them. So you want to see a healthy amount of showings in the marketplace. Now, you go back 4 to 5 years at the fever pitch of the market in 21 and 22, there were a ton of showings. 82,000 in October 2020, 78,000 in 21. Interest rates started going up, showings started going down. So we were in the 56 and 53,000 and 58,000 these last 3 years. And then this year, October was the highest number of showings since 2021. We had 75,000 showings in the month of October. Now, when you go back to the last time that we had 78,000, 75,000 plus showings in the month, you also had over 7,000 properties go under contract. This past month, we had 3,000. So that's less than half. So basically, when you look at this, for the last couple of years, these lines pretty much worked lockstep, right? Pendings and showings, the relationship between the two. And then 2023, mid 2023, they started diverging. So these lines are separating. It's kind of like that next, I'm going to show you that chart here in a little bit. We're going to look at actives versus closings, and that also is diverging, and that gap is getting bigger. So this here, you got a bunch of people who were out looking at homes in the month of October. They just weren't buying as many as they had in previous years. Even in over the last couple of years, we were in the 4,000 mark. There were 1,000 less properties that went under contract in the month of October this year. So that's a crack. So let's move on and we'll look at a couple more. Okay, active versus closing. So this goes all the way back to when the data exists in the software that we have. So it goes back to January 2012. So you can see that there's an ebb and flow. It's very cyclical, and it goes, you're going to have the most active properties in the summer, right? We talk about spring market. May, the second week of May historically is the week that the most new listings come to market. So by the time that you're in June and July, it's generally when inventory hits its peak in Metro Atlanta. So over the last couple of years, because of just how crazy things were in 21, 22, and 23, before interest rates shot up, you would see a very small number of properties that were active, and it was almost a 1-to-1 ratio with actives relative to the properties that closed in those given months. And then started going the other way. So you will see here in a little bit, but overall, you're almost at 21,000 active properties in the system right now. That's everything. That's single family, townhomes, and condos in the greater Atlanta, the 11 county area for only 3,500 closings. That's a 6-to-1 ratio. So this was a 1-to-1 ratio. So as this widens this way and this widens this way, there's just a lot more inventory, less properties closing. Buyers have an abundance of choice. what happens with supply and demand, right? There's less properties closing, less properties going under contract. We'll look at the rate of failure here in a little bit, but when there's an abundance of choice and not enough people to buy those, it's going to affect price at some point. So that's what I've been saying over these last couple of months, that there are now some nice opportunities for buyers. I expect that these opportunities are going to become more prevalent over the next couple of months as well. Now, this could completely rebalance come spring market. We're heading into a lull in the season with the holidays. It's November, we're almost at Thanksgiving, then we've got Christmas, New Year, and then generally people will start thinking about buying real estate in late February. By the time March rolls around, spring market. Okay. So when we look at this, nonetheless, this is what's happening now. If we zoom into it, this is basically since 2020. And that's what I was talking about. Look at this gap here. This is a 6-to-1 ratio. It's a little bit easier to see than on that other one. Now, these slides, I've got a whole report that is available for you to download at your convenience. If you want to go through this data at your own pace, check the first link in the comment and in the description. Feel free to fill out the form and I'll send this to you. Now, another telltale that the market is shifting in favor of buyers, number of price reductions. And so we're going to look at that right now. So throughout the metro, every county has its fair share of reductions. Now, when we take a look at it, generally speaking, on the low end, you're going to see 38% of the listings in Rockdale County have had at least one or more price reductions. And it's been as high as 51, 54% in Paulding, 50% in DeKalb, almost 51%. So half of all the listings have had one or more price reductions. Now, in these counties, in DeKalb, for instance, when they have had price reductions, of the ones that have been reduced, they've been reduced by an average of 7.7%. That's not a small number, right? On a $500,000 house, that's roughly $38,000. That's a pretty big amount is the average reduction. So we're looking at high fours. So basically 5 to 6% is the range. Now I'm going to show you, these are active properties. An active property is a property that is unsold. So it's not a failure, it just hasn't sold yet, right? Well, the ones that have sold or are headed that way are the ones that have gone under contract, that are one step closer to selling. So let's look at what that difference is. So I'm going to show you. You can see that the properties that were successful in attracting a buyer that have pended, see that difference? With the pendings, we talked about in DeKalb that the average cut was 7.7% for active properties. Well, that's still a property that's trying to find a buyer. The property that did find a buyer needed a cut of almost 10%. So it's like that. If you do factor the market as a whole, in Metro Atlanta, it's 6%. But you need 7.5% on average to attract that buyer. So if you're a seller and you're sitting on the market right now and you're wondering why you're not attracting a buyer, well, buyers are more discerning than they've been in a long time. If you've had a reduction, it's possible that you haven't had a big enough reduction. A lot of sellers right now started just way too high. I've been saying it in these last couple of videos, but sellers are negotiating like it's 21, 22. A lot of people who are selling actually bought their houses in that period. They experienced the reverse, right? They were on the buy side of these multiple offers and they were hoping when they would sell their properties that they'd be able to recreate that and sell at that peak. Now, the good news is it is a peak from a value standpoint. Properties are at their highest value ever pretty much right now. So you're at the top of the market. But you're going to have to give a little back if you're pricing it too high and you're sitting on the market. We're going to look at these metrics here in a little bit. You might not have cut enough. So that's by county. I want to also show you these price reductions by price band. So the median is $424,900 right now. That's the median price. So we're basically between these two, right? So for properties that are actively on the market at the median price, they've had roughly 1 out of 2 homes have a reduction. 48.4 and 48.5%. And it's roughly 4 to 5%. We're going to take a look at that on the pending side in a moment, but I want to call your attention to these two. So 8 to 1 million, all right, 4.8 and 5.7. And you're looking at 42 and 43%. Look at this difference. So on this next page, we'll start here. Notice how we went from 42 and 43 down to 29 and 25.9. So this is a part of the market that the properties that have gone under contract first of all, it was really closer to a quarter to a third of the market that needed reductions, which means that there are 70 to 75% of properties that went under contract that were priced appropriately. So it's interesting, right? Look at how this goes down. So the properties where people are more apt or more likely to test the market with higher prices seems to be in the lower price bands. As you go up in price, generally you have a more seasoned home seller, somebody who's owned one or more homes before in the past, and they're pricing properties a little bit more competitively. Probably also because their properties appreciated the most percentage wise over the last 5 to 10 years, depending on what their tenure of ownership is. And rather than test the market, they're going to price it a little bit more aggressively to get it to move. That's what we're seeing here. That's 70% for 8 to 9 and 75% for the 9 to 1 million. Why is that? Well, if you're a first time home buyer who bought a property, paid above asking price back in 2021, 2, and parts of 3, and now you're selling, either there's a lot of different reasons somebody might choose to sell right now, right? You got laid off. There's a lot of layoffs happening in America right now. So if you're on the receiving end of that and you don't necessarily want to go out and get a HELOC on the house, maybe it's been a little while, you've explored the HELOC option. The next option is to sell the house to get access to the equity in the property to use as savings. A lot of people, like it or not, live paycheck to paycheck. And I think the average American just doesn't have a ton of savings, especially with the way inflation has been over the last couple of years and everything from groceries to everyday necessities being more expensive than ever. So in the lower brackets, you have more people who need to get every single dollar that they possibly can out of these properties. So they're going to test the market a little bit more. That's my theory. And as you go up in price, they made more, because if you're in a market where something appreciates hypothetically by 10%, well, 10% of a $300,000 property means that next year your house is worth $330,000, but 10% of $1 million property, now that property next year is worth $100,000 more, 100,000, 30,000. So that's just a working theory. Drop a comment. Let me know if you think I'm crazy, but that's why I think, especially in these two brackets, that it's such a lower number comparatively speaking. Percentages can be tough to conceptualize. So I made it easy. I crunched the actual numbers. This is what we're looking at in terms of raw average data for just actual price cuts, dollar amounts. So the red are active listings, and the black ones, the black lines, are pending listings. And in the price range that we just looked at, we were looking at 8 to 9 and then 9 to 1 million. You can see here that it's 45,000 and 69,000. So they kind of mirror each other, right? When you look at average active reduction and active pending reduction, where you're going to see some differences is in the lower part of the market. And this here for $1 million plus, this here is literally $1 million plus. That can go up to several $1,000,000, up to 10, I think 15 million is one of the ones that's on this list here. So we're not going to cover the $1 million plus segment very much in this video. I've got a video dedicated to that, but take a look here at these lower ends. So smaller actual dollar cut numbers on the actives. You can see it took a couple extra $1,000 to get the properties over that hump and under contract, average of about $4,000 to $5,000 more. And then this is a big jump here between 7 and 8. So it's roughly a $13,000 difference. So if we're seeing all of these reductions, why is the median price flatlining, right? Why hasn't it moved over the last couple of years? And it has, but these are mixed signals. It has, I'm going to show you here in just a moment. But this is a new metric that we're going to look at, and it's asking price per square foot. Blue line is 2025. Yellow is last year. Here's what I want to show you and why it's relevant to this conversation. So there's going to be a seasonality to this. It tends to peak in the spring market and summer. And then over the next couple of months, it comes back down before at the beginning of the year, it shoots back up, right? So seasonality. Okay. That's not the notes. The note here is that right now we're at 191 a square foot. In April, we were at 203. And last year we were at 198 square foot, and it was just a little bit more. That was a $2 per square foot difference there. By the time we got to October, that's a $7 per square foot difference. So we're underperforming a little bit, not just last year, but the year before as well. When you take a look at these two here, take it with a grain of salt, though. We're still ahead of 2022. But hey, this is one of those things that we're going to keep an eye on. I'm going to bring this chart back next month and we'll see how that continues to go. Okay, median price by county. So Forsyth County, this is everything. So single family, townhomes and condos all blended together. Greater Atlanta, we're at 425. Last year was 425, 424.9. Last year was 425, $100 difference. But Forsyth County has the highest median price by county. It's $630,000, a little bit of an increase. So you've got some increases, but these are not as big as they were in previous years. So when you look at this, it was 614 up to 629. It's a $15,000 increase. That's a very, very small percentage. But you're starting to see year over year pullbacks now in a lot of these different counties, or in the same flatline. It's up a little bit here in Cherokee, down in Clayton. So flatline out in Paulding as well. Let's break this down a little bit more. And you'll see here by single family. So that's everything. This is single family. And then let's look at townhomes. So it looks like prices went up. It's just this scale is changing. So the average townhome in Metro Atlanta is selling for $390. Places that have a lot of townhomes, you've got Cherokee. They're down a little bit year over year. Bunch of townhomes in Cobb, down a little bit year over year. Obviously, DeKalb and Fulton have a whole bunch of townhomes. Forsyth as well. Look at that, down everywhere except for Gwinnett. There are hundreds and hundreds of townhomes. Townhomes are being built everywhere in Gwinnett right now. And it's a thriving market for townhomes. Look at that. The only place on this entire chart where prices went up year over year. So everywhere else, there's been a pullback in townhomes. Now, over the next 12 months, I expect that I don't think that we'll see year over year price appreciation in townhomes in Gwinnett. I don't. Here are condos. Condos, we're not going to look at every single county because some counties have very little volume when it comes to condos. They're not known for condos, but these are the condos or the counties that are, and you're seeing pullbacks. So pullbacks pretty much everywhere. This looks like it's about the same, but that there is a pullback. So for example, in Gwinnett, 266 down to 264.9, $1,100. But overall for condos in Metro Atlanta, 295 down from 300. So it's still a decrease in price. So if you're looking for attached properties, now you're starting to see prices come down, right? If you go back here to single family, well, single family didn't really have a ton of pullbacks. There were some pullbacks in some areas. You look at DeKalb and you look at Douglas, marginal, Clayton, marginal. But in many other parts, there was price appreciation. So Cobb, Cherokee, Forsyth, Fulton, all price appreciation. And then you had some parity in some of these other counties. So single family is usually a little bit more or quite a bit more resilient than attached properties when the market starts to shift. There's a bigger pool of people who buy single family. So I'm going to quickly show you some showing activity. And as usual, the big four, right? The Cobb, DeKalb, Fulton, and Gwinnett. This is predominantly the four areas that people look at the most houses. They're some of the biggest counties population-wise. They have the most inventory, most active properties. So of course, they're going to have the most showings. Cherokee and Forsyth. Forsyth has been, I've talked about Cherokee and Forsyth all the time on these videos. Hot markets. Year over year, showings are up in Cherokee. They're down in Forsyth. They're up in Cobb and DeKalb, but they're down here in Fulton and Gwinnett. All right. And then when you look at some of the southern side ones, Clayton, Fayette, Rockdale, we'll say Douglas to a certain extent, south of I-20, they're kind of down. There's just not a whole lot happening there in spite of some of these areas being some of the more affordable areas, right? So that leads us into days on market. Now we're going to look at median. I used to look at average, but honestly, it's better to find out what's happening at the middle of the market, because especially when you look at something like days on market, you have new construction that is just eating days on market. Builders are sitting on inventory. Some properties have been in the MLS now for a year, sometimes two, and that days on market just skews it. So the middle of the market makes a little bit more sense. So if you're a seller and it's been 2 or 3 weeks and you haven't attracted an offer, it's because for the median days on market to attract a buyer in Metro Atlanta as a whole right now is 31 days. And in some areas, it's quite a bit higher. So a lot of these are south side. When you take a look at these, 38, 40, and 42, things are still moving relatively well. 3.5 weeks in Cobb, for instance, and then Forsyth just under that 31-day mark, right? Fulton's above. We break this down by property type. Single family, roughly the same thing. 21 days, just 3 weeks in Cobb. Still 29 for Forsyth. That didn't change. Townhomes will take a little bit longer in general. So we went from 31 to 40 days. Fayette, but where there are a lot of townhomes. So Cobb, for instance, 42 days. Cherokee, bunch of townhomes, 39. Forsyth, 32. Fulton, 38. DeKalb, 38. Gwinnett, we talked a little bit earlier about Gwinnett having a ton of townhomes, 42 days. Condos, average days on market or the median day on market for a condo right now is 49 days. Take a look at Fulton, right? Condos in Buckhead, Midtown, etc. 55 days is the median. So months of supply tells us if we're in a buyer's or a seller's market. That's what the gray line is. This is balance. And right now, the red dotted line is at 4.1. So last year we were at 3 for Greater Atlanta. That's trended up. That's a big jump up. And when you take a look at some of these areas, they are like Fayette, for example, has gone into a balanced market now. That's what that is. Fulton is touching it. That's a balanced market. Rockdale, balanced market. Places like Cobb and Cherokee and then Gwinnett, and I'd say also Paulding, they're under the average of Greater Atlanta by quite a bit, especially Cobb. These are still generally, again, it's very pocket-based sellers markets. So how does that break down by property type? So single family, townhomes, of course, townhomes in Fayette, that's now over that 6 months of inventory. That's now a buyer's market. It's not even balanced, it's a buyer's. Same thing with Rockdale. DeKalb, balance. A lot of these other ones are cresting, they're nearing that balanced market. Now look at condos on this next one. So the Atlanta condo market as a whole is a buyer's market. And DeKalb and Fulton, they've been buyer's markets for a while. Look at that in Fulton right now. So, and I sold a condo in Atlanta just a couple months ago, and we were on the market for just about 3 weeks. That's not a lot of time now, considering the amount of competition that there is out there. If you're selling a condo in Atlanta right now, make sure to price it really well, because it's already a buyer's market. There's a ton of inventory, a ton of choices to choose from, and buyers, there's no reason to rush to make offers when you have that many choices. So they're going to look at a lot of different things and they're going to wait for stuff to come down in price right now. So you've got to be priced a little bit more aggressively from the onset, especially if you're an attached property. So let's look at where the inventory is in Metro Atlanta. So we're going to look at a couple of different statuses. On here, we're comparing all of them at once. So everything from new listings to active, pendings, closings, and failures. So green, inventory has been trending up. These are the amount of homes for sale in Atlanta. We're, as I mentioned, close to 21,000. New listings, meanwhile, for the last couple of months now, we've been flatlining, nothing jumping up necessarily there. And then when you look at closings and pendings, they're trending down. So if closings and pendings are trending down, failures have been about the same. Failures are about to jump up next month as we get to the end of December. They always do at the end of the year for expireds and withdrawals, because agents in their contracts with clients will put the end of the year as the end date. So that's why there are so many expired listings on the last day of the year. But if closings and pendings are down, that's why actives are up. So again, it's a situation where supply and demand. There's less demand right now, more supply. That's why in many parts of the metros, we saw a couple slides ago, prices are starting to come down. Listings, this is brand new listings by month. So at this time of the year, people are starting to get into holiday mode. So this is October. So we're doing better than 22 and 23 for new listings coming to market. Roughly, last year they were marginally better for new listings coming. You're looking at 7,534 versus 77. It's not a big difference. It's less than 200 for the whole market. But at this time of the year, next month and then the month after, you'll see there's going to be a seasonal dip. And then in the spring, they start to come back up. Well, that's what's going to happen in 2026. So here's a closer look at active compared to the last years. And notice how you see that seasonality at this time, like it pretty much peaked and then you started to see it dip down. This doesn't look like it's dipping down, does it? It's one of those cracks. We have a lot of inventory. It's opportunity for buyers. And it's a tale of caution for sellers. Like you really need to make sure that you understand the market. And it could be different. Like you could be in the same city, the same potential even school district, and it could be a couple streets over and the market is completely different. Real estate is hyper local. So it's important to, this video gives you an idea of what's happening in the general market. When you want to know what's happening specifically in your area, you've got to drill down with the data. So you need an agent that is data driven to be able to tell you exactly how to position your house in a quickly shifting market. That's more important than ever. So actives are up, and for pendings, we're actually underperforming by quite a bit. Now take a look at this. So just about 3,100 properties went under contract in the month of October this year. Last year, 4,200, and then 4,000 and 4,000 and 22 and 23. So that's a full 1,000 less properties going under contract now. Now, rates last year were a little bit higher ish. They were about the same, actually. This was right before the election and they started shooting up. I'm going to show you rates here. We're going to have that slide before we end as well. But nonetheless, that is 1,200 less properties going under contract just a year later with the same interest rates. So it's a question where people who could afford to buy at these interest rates have already bought. Now, every progression forward in time, there are less and less people who can afford to buy. And that's what we're seeing. I think it's a function of that. I think it's also the job market. I think that you're going to start to see more layoffs, and that's going to impact housing quite a bit. So here's closings. Market is also underperforming relative to the last previous years also when it comes to closings. And then for failures, we're overperforming. So see what I mean at the end of the year. So again, I've mentioned this in previous videos, but that's what that is. That's the December 31st. Everyone puts that on their contracts basically, and that's when they expire if they haven't sold. But look at this gap. That's quite a bit more expired and withdrawns on a month-to-month basis just compared to last year. And like, for instance, this past month, there was 3,864. That is roughly 800 more this year than there were last year in the same time period. Now, pending ratios, this is really, I love looking at the pending ratio because it's going to tell us how many properties are going under contract relative to the amount of properties that are available. The formula is pendings divided by the actives plus pendings in a given area. So I've mentioned this, but if you're a first-time viewer, you want the pending ratio to be low if you're buying. If you want to live in an area, the lower the pending ratio, the better, because that means that there are more choices, less houses going under contract. And when a seller has an opportunity to sell, there aren't a whole lot going under contract. They're going to probably do more to keep you in that transaction, meaning you'll probably get a better price in the house, more concessions, a more willingness to negotiate during the repair contingency, right? During the due diligence period. So that works out in your favor. Now, as a seller, you want this to be as high as possible because it means that more properties are selling relative to the choices in the market. And that means that you have more power. So this is exactly what I mean. You go back to Like let's look at 2022, right before interest rates started shooting up, and this was over 50%. Right? That's a huge pending ratio, and we haven't been there in a while. This is where we've been this year. So you look at spring, the beginning of spring market, it was 1 out of 4 versus 1 out of 2. Okay. Peak of summer, July, it was down to 31% in 2022, but we're down to 18%, and now it's 13%. That's like 1 out of 7 houses. It's 1 out of 7, 1 out of 8, somewhere around there, right? Of houses goes under contract in a given area. Like this is a chart that shows one of the cracks, I think, in a way that over the next couple of months, you could potentially see this pending ratio dip into the single digits. I mean, we're certainly trending that way. And there are some people who are going to time the market, and there are some people who've been timing the market since 2020. And sometimes when you time the market that long, if you had gotten into the market, you would have rode that wave of appreciation up, right? Since 2020. Now the market's starting to correct a little bit. So those same people who waited are probably still going to wait. Some people will never end up buying a house because they're always waiting to buy at the right time, and they're hoping for a crash, another 2007 financial crisis. And I don't have a crystal ball. It's possible that something like that could happen. It's unlikely, but it's possible, right? So if you're the type of person that's going to wait for the crash, you're going to wait for the crash. There's something to be said, though. You need shelter. Everybody needs a roof over their head. Sometimes it's better to rent. Sometimes it's better to buy. If you have a long enough time horizon, little corrections in the market will even themselves out. Even people who bought in 2005, 6, and 7 before prices really took a dive in Metro Atlanta are way ahead, even if they never sold because of where prices went after. So if you have a long enough time horizon, everything works itself out. And you still need a place to live, right? So if you're in the market right now or you're about to be over the next couple of months, the encouraging thing as a buyer is you're going to get a better deal on a house heading into the next couple of months than you would have if you purchased last year, for instance. So it's encouraging. I'm a big proponent of a more fair housing market. I think that more people buying houses is a good thing. More people being able to afford houses is a good thing. You have so many big companies and hedge funds and so forth that are buying houses by the hundreds of thousands. Headline right now, this past week, I saw you have Invitation Homes who have started gobbling up inventory from builders in many different states who are desperate because they overbuilt. And rather than sell at a huge discount to the regular consumer, they're just bundling everything and selling it to the hedge funds. It's kind of like if you were in the market between 2009, 10, 11, and 12, 13, 14, when these big banks would bundle hundreds of properties and sell them to portfolio buyers. They'd buy big portfolios of properties. Well, the average person never got access to that. So the builders are starting to do that. Again, these hedge funds win, and there's less and less people who are owners because of that. So the ratio, I don't have it for this. I'll probably end up doing a video on it, but the ratio of ownership versus rentals is quickly changing. Okay, next, this is pending ratio by county. So you can see that it's down across the board. So Cobb, for example, had the highest pending ratio last year in 2024 for all of the Metro Atlanta or Greater Atlanta 11 county region. This year we're down to 15.1%, and that 15.1% is still higher than all of the other counties. But look at Fayette. That's a lot of properties that are on the market right now. I wonder if it has anything to do with Marvel moving its productions overseas to the UK of all places and out of Fayetteville. So for Metro Atlanta as a whole, it's 12.9%. Last year, it was 20%. That's a big drop, right? So you can kind of see where some of the lower numbers are. If you're buying in some of these counties, there's just a lot of inventory relative to what's going under contract, and that opens up possibilities. Now, there are more and more sellers who are paying closing costs. And when you break it down by county, this is the number of transactions that closed where sellers paid closing costs. So take a look and you can see it's between generally 58, so call it 60 and 80%. But places we were talking about Cobb most recently, well, 69% of the homeowners paid some type of concession there, but it's as high as almost 80% in Rockdale. When you take a look at Rockdale, and you take a look at Douglas, you take a look at Clayton, and you take a look at Fayette, these are some of the areas in Metro Atlanta on the south side where everyone's paying some type of concession. So not only are homes more affordable, but if you need help with closing costs because you only have so much saved up for down payment, chances are you'll get, in all of these counties, you'll get assisted more often than not. But how much? Let's look at that. And I think we're going to look at price bands as well. So this is price bands. And when you're looking at some of the lower ones, it makes sense, right? Because you have a little bit more like first time home buyers here. I saw a statistic. It was an article that came out, or a headline that I saw this week, that the average age of the first time home buyer today is now 40 years old. I bought my first house when I was 28 in 2009, 2010. And I think the average back then was like 31. Now we're up to 40. It just shows how tough it is. It's taking longer and longer to get into houses because of how high home prices have gone and how high interest rates have gone. And those two things have created a wildly unaffordable market when you consider that wages didn't keep up, right? You can see that most of the closing costs, like 3/4 of the homes that paid closing costs, were really between that 3 and 500,000. There's a little bit of a bump here between 9 and $1 million, but you can kind of see where that is. So let's look at some actual numbers. I know what this looks like. It looks like Fayette County is giving everybody else the finger. It's just how it worked out. I will say the sample size in Fayette is very, very small. When you look at the number of transactions in Fayette relative to everywhere else, we saw it earlier, it's a big, big difference, right? So in Fayette, the numbers are going to be skewed. It's just what it is. But that's still what the data shows. So that's why I included it in this data set. But when you see on average, Cobb, that number works out to be roughly $9,200. Right? In Forsyth, it's $9,500, Fulton, $88. That's still some decent numbers towards your closing costs, because your closing costs are going to be about 3% of what the purchase price is. And then when we look at it by price band, $1 million plus, of course, you're going to have the most there. But some of these closing costs paid on multi-million-dollar houses can be in the six figures sometimes. So that's definitely a wider range. But in most of the market, you're seeing 8 to 9,000, 10 here, 10.6 in the 7 to 8. It doesn't necessarily scale proportionally, because when you look at it, $10,000 into 800 is not the same thing as 9,000 into 400,000, for example, right? So if it's scaled proportionally, then this would be 16 to 17,000. Nonetheless, sellers are offering to pay more this year than they did in previous years towards closing costs to get deals done. And that brings us to mortgage rates. So I mentioned that they had been trending down, and these are the 30-year and 15-year rates according to Freddie Mac. Now, after the Fed made their announcements in September and this past week, rates shot up for a little bit. There's no question. The market was disappointed by 25 basis point cuts in the Fed fund rate. It's not necessarily going to directly impact mortgage rates. There are other things like the 10-year treasury, the job market, stock market, a whole bunch of other things, really. But as a whole, rates have been trending down this year. And that's a good thing, because if rates continue to trend down, maybe we find, I think 6 is a psychological barrier on the 30-year mortgage. I think you get into the 5s, and there's quite a few people on the sidelines who'll decide to take part in the market. And in addition to that, home prices are starting to trend down. So if they creep down into the 5s incrementally, it's kind of like a frog boiling in the water. It's just going to sit there, right? You're going to have some people come in, but it's going to be a trickle. If you were ever to see rates drop from 6.17 down to 5.5 or to the low 5s all at once, which won't happen, then you'd have a whole bunch, like you'd feel that, and a whole bunch of people would come into the market, and then it would have an impact on the market. You'd have supply shock the other way, And probably home prices would go up as a result because a bunch of people coming in competing for the same houses, prices go up. This is what's happening in the market right now. If you have questions, feel free to reach out. You want access to these slides, feel free to fill out the form. Link is in that first comment and in the description. Happy to send it to you. And if you're going to watch more videos today, definitely think you should watch this one next. Thank you so much for watching, and I hope to see you on the next one.